Good afternoon, traders. I'm Michael Sabo, Senior Commodities Broker here with RJO Futures on Wednesday, December 11th, bringing you some commentary here in the energy markets. Before we get started, though, I do want to mention to you, I do have a few of these available. It's 2014 Commodity Trading Guide. If you'd like to get one, go ahead. My email address is there on the screen. Go ahead, shoot me all of your contact information, and I'll be more than happy to get one sent out to you. These are limited in number, so first come, first serve. But packed with a lot of great information. This thing's got about 60 pages long. It's got a full commodity calendar in there. It gives you the list of all the option expiration dates, first notice, last trade dates, all the major economic reports. And then it also has for all the major traded commodities, you can go ahead and you can look in here. For example, if we come in here and look at page 31, this is going into some great historical perspective on the natural gas market, talks about price ranges, gives a lot of the big picture fundamental news, and as well some of the key technical levels. So it's really a great and handy guide to have available throughout the year. So again, shoot me all your contact information and we'll get one sent out to you. Now moving on, let's talk here about crude oil. Crude oil prices are currently trading around 97.36. That's basis January oil. We're off a little over $1. Right now it's down about $1.15. Brent's up slightly. We're up about 21 cents there, 109.59 as we're seeing that spread widen. So some great opportunities there. Natural gas. I've talked about that in some of those prior posts. Natural gas, seeing that some value in there. And one thing, you take a look at where natural gas prices are at right now. Currently, natural gas is trading. We're up about 9 to 10 cents, trading around 4.3320. So we've really seen natural gas prices continue to remain firm. Got some ideas on how you could still play that market. So give me a call. Complex, kind of quiet, unchanged to off about 2 cents. And let's talk about some of the big things that are driving this market. Well, you got S&Ps. Look at the S&Ps here today. Equities markets have been basically weak all day. As you've got more talk coming out of potential taper. So it's kind of what's on the table here. And how that relates to the oil market is this. They start to tapering, and one way to do that, obviously, you start to raise interest rates as well as pull in some of the all this $85 billion that's out there on the table, and so they stop those bond buyback program here as well as you start raising interest rates. And that can potentially cause the dollar to start strengthening, and if the U.S. dollar starts to strengthen, that can start to put pressure on commodities, especially on crude oil. So that's part of what's going on here today. But I think the bigger picture really still centers around what I've talked about in so many of these posts, which is the supply and demand issue. And by the way, if you want to look at some of these prior posts here, go to the website, rjofutures.com, and click on my broker bio, and it has all of the different posts there that I've had, so you can kind of thumb through some of those past posts there. But the thing with it is you look at our overall supply, we're still running at record supplies. Now, that's in light of, after seeing today's EIA data that came out, we saw a draw in the stockpiles. It was about 10.7 million barrel draw. Most traders were looking for around 2.5 to 2.5 million barrel draw, so a little bit larger than expected draw. And yet crude prices are selling off. Why? Well, you know what? Look at yesterday's price action. Market was moving up. Market's actually been moving up over the last week. I think this is a classic case of buy the rumor, sell the fact. So, and again, look at our current stockpiles of oil. We are still running at a record amount of oil. Also, I think that's important to point out is that for the first time in a long time here, the month of November, we averaged here we're producing here in the States about 8 million barrels, a little over 8 million barrels per oil a day in our oil production here. So that's real positive in terms of keeping our crude stocks at the levels that they were at, and really helping to add to it. So seeing more oil production helps to translate into potentially lower prices. So that coupled with short-term technical indicators that have really overextended themselves. And, if you really look at the market here in perspective here, for months, the bears have been in control of this market. And finally, over the last week, you really start to see the bulls kind of grab a hold of it. I think really squeezing a lot of the weak shorts out of the market. And so they're kind of having their week, so to speak. But ultimately, my opinion of it is that I think the bears are going to grab back a hold of this market. And I think you're going to see prices start to come under pressure. So got some ideas on how you could potentially position yourself at these levels. Give me a call, shoot me an email, get into more detail. Keep in mind, 200-day moving average is right around 99.15. but I do have some ideas here, and I think that ultimately you're going to see crude prices possibly sliding off here into the rest of the year. So again, give me a call, shoot me an email. I'll be more than happy to chat with you. And keep in mind that futures trading does involve a substantial amount of risk. It may not be suitable for all traders. Good luck and good trading.